Good morning, trading world. It is May 12th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. There are a few things that I have to point out as unsettling in the market right now. I know you have heard me and plenty other people say they are looking for this capitulation. We have yet to see a capitulation moment. Let me show you a capitulation moment. Going back to March 12th, 2020 on a 5-year daily chart. This is your March 12th area. This is going into that bottoming phase of the pandemic. Look at the volume surge that we have here. Capitulation is akin to every trader standing up and firing trades around the same time. Huge volume going the same way, usually around 6,000 to 8,000 contracts a minute. Now look over here where we are now. Does that look anything like this? Or look anything like a huge volume moment? No, it doesn't. So right now this is really disturbing to me, which says that even for this temporary bottom that I'm looking for, we haven't found anything close to it because of the way volume is. Next, the VIX backing off on a day like yesterday doesn't feel right. Backing back down to 32. Again, I can't get over how light the volume is right now, which means no one is scared and people are either comfortable, meaning they have no risk, or they're just ready to go down with the ship. Last of all, yesterday we closed with an advanced decline line of 28 advancing versus 73 declining. This just means there are 28 more stocks that could have been hit that can fuel the sell-off. Also, taking a closer look into that 28, because a lot of times people often wonder, like, how can the market be going down when the advanced decline line is 50-50? Or because we did start off with a rather kind of range-bound 50-50 advanced decline line. And the reason being is that algorithms know the right stocks to hit, and it's all about market cap. So you can have 20 regular stocks going up, but if Apple is going down, it may trump whatever those other 20 stocks are. So right now what you're seeing is that they're coming for big market cap stocks like Apple, like Amazon, like Google, like Facebook. When those get hit, almost the entire other stocks in the S&P 500 can be either flatline or positive, but with those going down, it's just about going to drag the rest of the S&P 500 down with it. As long as you have the bigger market caps from the financials flatlining or to the downside too. also talk about angry markets and seeing the craziness or fits of rage. There is a visual test for this. Some of the most liquid products in the market are the SPY and the SPX, and they usually keep a penny wide spread between bid and ask. Anytime the bid and ask spread goes up to and above 3 cents wide, we have an angry market. And if you use a trade ladder or a dome, this is evident because price can't stay on the screen. You'll see your price ladder. Let me get this off of the screen here. All right, this is a price ladder, and your current price usually is highlighted. I don't use this in Thinkorswim often to trade, but we're at 392.75. 392. I'm sorry, we're at 389.83. 389. Okay, which means we're right in here somewhere. 389. I don't know why it's not highlighted, but usually it's highlighted. And what happens is that current price jumps everywhere. It just jumps out of your screen, and you have a hard time even just keeping track of it. People that trade futures will know what I'm talking about, because this is a lot of people use the ladders or domes like this to trade futures. I don't really care for it, but a lot of people do. And when you see action like this, where the mid price is jumping around, the market is not trading linear. It is jumping around, and that's why you have these big bars, and it's just impossible to trade in a market like that when it's that angry. And I've said it before, because I am a futures trader. Whenever I see something like this, I'm not trading. I'm not touching futures at all, because it makes no sense. And as a personal example, I was trading futures with a bracket. I normally trade with a bracket, which means I have a stop loss and a target entered at the same time that I place the order. When markets are jumping around like this, I've had this happen to me before, where I place an order and the market jumps, and before it enters me in the position, but it jumps past the stop loss before I even know that I'm in the order. And now we're trading outside of my bracket, and you're just out there. So this is an impossible market to trade futures in when that ladder gets angry like that. Now, the other thing is that we keep playing around the edge of the market maker's expected move, but just haven't quite let it go yet. The market just seems to like playing an evil game, trying to see how many people it can rope into a gamma squeeze. At some point, intraday levels are not going to matter once this thing starts to go down. Channels are what you will need to pay attention to. Current channel is 397 down to 379. After that, it may be 379 down to 364 or so. I wouldn't be surprised to end up around 350. The last thing even resembling a bounce lasted 2 hours, and if this keeps up and we don't get a capitulation type moment for a temporary bottom, we may be setting up for a Black Monday type event. Just wanted to stress the importance of the moment and make sure you don't tie up too much risk in the same range. Stay safe, Know your risk. I'll be right back with the key levels of the day. All right, and here we are with the key levels of the day. Starting on the resistance side, we have 392 to 393 area as the jack resistance. We're going to have, again, a hard time breaking through this area right here as jack resistance. Then we have the 394 to 397 area as the queen resistance, and then 398 to a 408 area as the king resistance. On the support side, we have jack support at 388 to the 387 area, then queen support at 386 to the 385 area, and then king support at the 384 to the 379 area. At this point, once we hit into this 389 or so area, I'm considering us broken away from the market maker's expected move, that 397. And this is when that dynamic hedging should really start to kind of take place, where professional money managers have to begin to sell S&P futures to hedge portfolios. Like I said again, as a reminder, once we break below and professional managers have to dynamically hedge, this is also when we start to look for redemptions, margin calls, where redemptions are where people, retail people, mom and pop people, they call in to their 401k or retirement plan and say, I've seen enough, get me out at whatever the price is now. And then you have margin calls where brokers are looking at retail accounts saying, okay, you have too much risk on. We have to get you out of some of this risk, and we're pulling you out at whatever price. All of this happens at these levels once that dynamic hedging starts to set in. And this is where we get the panic type selling, because all of those actions are market orders. Get me out at whatever. Going into the thesis for today, just like we have had for the last 3 days, the main thesis is bullish, closing above the 392.75 with a projected target high of between 398 and 401. The alternate thesis, as I continue to tell you, on days like this when people keep stacking up to the bullish side expecting a bounce, the alternate thesis is more prevalent and can be way more explosive. The alternate thesis is bearish, closing below the 392.75 with a projected target low between 387 and 379. The current channel we are in is 397 down to 379. The next major channel down is 379 to 364. Again, I'm stressing it over and over. Remember, alternate thesis could be more explosive as more people gather on the bullish side expecting a bounce. Also, remember the weekly outlook. It is closing below 411.34 with a possible retracement up to 415. But the weekly outlook is bearish. When I think about how we could possibly stretch out this capitulation moment that I'm looking forward to next week, waiting on this V bottom. If that happens, look for a reprieve on Friday, bouncing almost like a blow off top out of nowhere on Friday. Give me just a moment. Let me see about bringing up the scenarios of the day. All right, our first scenario is our trend day down structure. We can open gap down the The blue line represents the previous close. We open gap down and start off with a rally back toward that previous close. We find resistance on or before that previous close, then begin the downtrend for the morning. This is going to be the most important part of the day. If we continue down and really get into it, we could continue for a good while. This could be a 2-day event going into Friday morning. So there will be, as with most trend days, a kind of slight rally back into the close, but don't expect much or at all if we really start to take it down, because we could continue down into the close. All right, let's bring up scenario number 2. All right, scenario number 2 is our rounded reversal day type structure, but less of the reversal part. We could get a continued push lower toward the queen or king support area and find midday chop around either the king or queen support. I'm holding back on the sharp V bottom a bit because I kind of feel like this could kind of stretch into like a 2-day fiasco. But normally on a rounded reversal day type structure, that second half of the day, we usually get that opposite reaction with the same energy going back up. But if this is what I feel, we will get some type of reprieve toward the end of the day, but it's not going to be the same energy we had coming down. We are not going to make all of this up today. It is just going to be some short covering going into the close that kind of pulls us up, and we're going to continue lower into tomorrow. However, be it very small portion of tomorrow likely. So that is scenario number 2, and let's bring up the last scenario. All right, the last scenario is our expansive range day structure. We could look to set a decision area high boundary around the jack or queen resistance area before falling lower. And so this is going to be the start or the left side of that V bottom. I'm not so sure about us getting back to the middle of the range, because if this happens again the way I think, we're going to continue off into the morning session lower on Friday. These are the scenarios. I hope this helps. It is extremely important that you understand and know your risk. It just kind of brings back to mind, I used to post things on a Reddit board, and there was a particular trader that had issue because I never really posted a lot of my trades. And the reason being is everybody has different risk profiles. And some of the things that I do take on a whole lot more risk than the average trader, because not everyone can sell naked premium. It is not for everyone. That especially right now, it is not for the faint of heart. So that's a lot of the reason I don't really post a lot of my positions, because some of the things I do are not for the average or even slightly above average trader. Especially in these times, and it's just so important that you understand your own risk and your risk profile, what you can take as a loss and get up and keep moving the next day. You have to be okay with that in these times. You have to understand hedging. So again, with that, please know your risk. I hope this helps. Wishing everyone a positive trading day. Have a great one.